that gave us a sense of the issues and fixes required from a policy perspective. Now, Indian stock investors have found an oasis in insurance in an otherwise perilous desert, Avan. Insurance stocks have seen heavy demand and most of them have outperformed the equity benchmark. But unlike NBFCs or banks, the insurance sector does not have NPA, liquidity, or even solvency issues, and most of all insurers are well capitalized. What a dream scenario that is.
It absolutely is. It's one of the favorite sectors as well of stock market pickers, and I think we should collectively say touch wood. So is the appetite for insurance likely to go up in an underpenetrated market like India? What are the likely challenges? To discuss all of this and more, please welcome on stage Vipin Anand, Managing Director, LIC. We also have Vibha Padalkar, Managing Director, CEO, HDFC LIFE, joining in on the stage. And this discussion is going to be moderated by ET Now's Tamanna Inamdar.
All yours, Tamanna.
Hi, welcome everyone. All that stands between you and a lovely lunch is this exciting discussion, which I'm sure will whet your appetite. As appetite has been whetted, as Avan mentioned and Aisha mentioned, for the insurance space in the markets. Now, why are we starting with that point? Because in an otherwise fairly bleak, sometimes dismal landscape, insurance has stood out, and not just from the stock market point of view. LIC has turned 45% in the new premiums this year as well. Let me start with Vibha. What is everyone missing that the insurance space is getting right?
I think...
Is that on? Yes, it is.
I think we are doing what we should be doing, which is focusing on ensuring the average Indian. Penetration levels are low. Means of getting to them have been only the tried and tested methods. Pricing has been high in the past. So a whole amalgamation of things in terms of both innovation as well as focusing on getting the message to the last mile is what we're doing and beginning to do very well as a sector. Insurance has been a fairly defensive stock. So if you were to just look at market, I think one should temper it, and I should be the last one saying it. But I think that is really the outcome of other factors than just is insurance, what is the roadmap to insurance. So bottom line is that as a sector, yes, we are beginning to get things right. And against a backdrop of a lot of enablers, we could do even better.
We'll come to those in a bit. Of course, when you're speaking about insurance and life insurance, let's not ignore not just the elephant, I think the mammoth in the room, which is LIC. When we were chatting before the session started, I had an opportunity of asking Mr. Anand something I've wondered for a long time. In every space where the private sector has come in, the government-backed company tends to start losing market share. With LIC, it's untouchable in that sense. Why is that?
You see, the basic thing is that we have never really behaved totally like a government company. We have always been in competition. Life insurance market may have opened only in 2000, but our major focus was on saving kind of product, which still stays there. And in this area, we were competing with so many different institutions. We were competing with the banks. We were competing with post office. We were competing with the chit fund companies. We were competing maybe even with gold and real estate markets. So that competition and the spirit of giving a fight to everybody has always been there. That has been one thing. Another major thing has been that this is a business which relies hugely on technology. And because of the large amount of paperwork involved, the large number of customers involved, you cannot run this business without technology. One thing which LIC realized very early, I think possibly nobody in this room would be thinking that LIC started computerization as far back as 1961, when maybe even the term was unheard of in most of the country. In 1983, I was myself, a system analyst and programmer on one of the mainframe computers imported from US at that point of time. So we have been able to provide products and services to our customers, which they have been asking for. We have a huge network of agents which reaches every nook and corner of the country. And that gives us a kind of an unparalleled reach and control over this industry.
Okay. Absolutely. Now, of course, the theme of the conclave this year is about how we can reach the $5 trillion mark. And as we know, insurance is right now so exciting and has been for several years because of its huge potential. Out of every 100 Indians, only 4 are insured. For life insurance, of course, the numbers for general insurance are even fewer. Vibha, let me get you to kick off, this train of thought on how the insurance space can play a huge part in actually achieving that $5 trillion dream.
So if I were to look at the opportunity in front of us and why insurance should do well, leaving aside what's happening and the overall government's goal in getting there, but just focusing on the opportunity for a moment, China's per capita GDP is 4x or 5x ours. And no wonder that their penetration levels in terms of protection is significantly higher. The number of agents is 4x the number of agents that India has, and this is in the retail space. If you were to look at demographic changes in India itself, today it's about 6% of the population of people over 65, and in 20 years, that's going to become 15% of our population. And we can see that, and this I'm talking starting from 2015 onwards. So that's already beginning to happen. If I were to look at even protection gap, out of every 100, there is a protected amount only of sub 8. And so on. If I were to look at health insurance, inflation in the health space is 2 to 2.5x regular inflation. Yeah. So people in this room, post-retirement, are not going to like to take services from other than private hospitals, and so on. So put all of that into a melting pot, and that's very much what we do as a business, means that solutions, whether it's in retirement, whether it is in life, whether it is in covering morbidity, the opportunities are enormous. And so if we continue innovating and if we continue reaching the uninsured customer, there is enough in terms of growth. And so as a sector, we can start chipping in for the 5 trillion kind of a mark. And this is without any kind of interventions. And you said we'll talk about it later, so maybe I'll hold my horses till then.
No, absolutely, because you need an environment to enable that goal as well. And of course, Mr. Anand, I want you to come on the point of how insurance can contribute to a $5 trillion economy, especially a behemoth like LIC, and also with the question of why even now we are so terribly uninsured as a people. The situation has not changed phenomenally in the last 20 years. The goals have all been there. Where has the hurdle come?
Just Vibha made a comparison with China. Now let us look at China. They have almost the same population as us. I think currently we are about 6 or 7 crores only behind them. With that kind of a population, they have 100 life insurance companies, whereas we have just 24, out of whom also the bottom 10 are hardly contributing anything much. Again, if you look at the reach part of it, they have 8 million agents, 80 lakh agents as against our 20 lakh. We have 1/4 number of agents. So if you have, obviously you can't reach a huge population of 137 crore with just 20 lakh agents. It doesn't work out. What we need is a much larger number of insurance companies. What we need is a much, much larger number of agents. And I think this is where this whole story boils down to. For the last several years, we have been talking about the demographic dividend. Yes. I think the demographic dividend can work positively only if we are able to offer employment opportunities. And I think this is one sector, life insurance in particular, which offers huge opportunities for earning a very decent living in a very socially productive manner. And we can absorb at least another 50 lakh agents. So if 50 lakh people were to join the distribution network, let us leave 50 lakh, even 20 lakh if they join, that would mean employment to 20 lakh people, people earning wages, contributing to taxes, bringing in a huge amount of savings which can be used as investment in the public sector as well as the private sector. The government could get a huge amount of money for infrastructure investments, and the private sector could get a huge amount of money for capacity enhancement, which would lead to further acceleration of the whole process.
Is it a supply side issue, sir? Is it the problem? Is the problem that we have fewer insurance agents, or is the demand for the products the issue?
I think demand is not really so much of an issue, because demand to a certain level is generated by the agents themselves. When you reach somebody, when you explain to them the products, explain to them the benefits of the products, there is a market. I don't think that is really the problem. The problem is the reach. In a huge and diverse country like India, unless you are able to come to a person face to face, I think that kind of a situation could not happen. And the way I was just explaining, very easily we can produce another $100 billion worth of premium. Yeah. And that coming into, let's say, 50% as per the regulations coming to the government bonds would create a huge base for capex and infrastructure investment. On the other hand, out of the balance $50 billion going to the public and private corporate sector could create a revolution in that sector, and this will have a spiraling effect on the entire economy in terms of generating further employment, further income, and further taxes.
Vibha, let me get your take on both factors. Of course, I asked Mr. Anand why LIC continues to dominate the market as a private player and a shining star, really, of darling of the capital markets as well right now. I must ask you why private players are still, sort of lagging behind. What is your take on these dismal penetration levels that we have as far as insurance is concerned?
Actually, private players are not lagging behind. The CAGR of private players has exceeded LIC's growth, just to put things in the retail space. Yeah. So if I take out the group business. So private players have done well. In terms of your question as to why overall as a sector lagging, I think I do agree that the reach, the final mile of getting there, I think the products are exceedingly attractive, also vis-a-vis what else is out there. And I think millennials now are more and more open to buying insurance as long as the ease of onboarding, which is what we are finding, is there. And if we defocus from asset ownership to experiential coverage, then that's something that also tends to appeal to them. So we want to be in their space on a digital platform. So there is a combination of events, but even worldwide you will see that people don't wake up and say, I want to buy insurance. Yeah. They need to be cajoled to put away money rather than the here and now expenditure for something that might happen in the future. But we also want to give it a positive spin and not only a negative, that what if scenario. We want to give a positive spin, say in retirement, like my first salary after retirement, to say that now you have all the freedom. You're easily going to outlive 20, 25 years post-retirement age of 60 and still be in pretty good health. So why not now realize your dreams which you had held back? So we want to start giving a different message to only dying or falling sick or whatever, in terms of that too is important, but also is important in terms of what's happening in terms of outlook on interest rates. What is the juxtaposition of inflation on it? What is net of inflation return that you would get, say, in a bank fixed deposit? So getting them to think about this differently is how hopefully we will start taking baby steps into making certain segments at least into being a pull product.
In the context of course, Mr. Anand talked about how you have scope for 50 lakh more agents in the country. Do you think that digitization is going to change that interface?
I think both will coexist. Phygital is an oft said word nowadays. So there is a Bharat, there is an India, there are millennials, there are older people, and so on. There are people in the rural market, non-metro markets, etc. So we need to be present where the customer is present, rather than thinking in these boxes as to I will force fit it. And whatever works for us to get to the customer, ease for the customer, we will be present in that space. I think that's the way of thinking, rather than into these different buckets.
You know, I think before we wrap, I must come to you on the regulatory aspects we talked about. I mean, we're all on one page in terms of the role that the insurance sector will have in this road to a $5 trillion economy, no doubt. What are the enablers that the sector now requires? There is talk, of course, of an increase in FDI limits. Possibly, hopefully, maybe we'll see something in the next budget. Do you think that will change the game, and what are the other factors that you would like to see?
So very quickly, one is unified KYC would do wonders, wherein one Indian has to give his KYC only once, and based on his consent, we can use it. So that gives a lot of ease of onboarding. Having some things fixed, for example, annuities being taxed twice, it's not equitable in law. I do understand the compulsions and the limitations, but nevertheless, that does not solve the problem, and given people living longer. Health is something that I think is woefully underpenetrated. So allowing life insurance companies to be in that space if they want to be. A separate carve out like an ATC, a 50,000 like what's happened under the NPS umbrella.
Yeah.
So these are some of the tweaks that can be done to really get going in some of these areas that are just there for a picking.
And as we wrap, last word to you, Mr. Anand, would you like to add to that list on what kind of a regulatory push now is required for this great role that you can play?
You see, one major thing which is happening now is we are moving towards what has happened in the Western world earlier, that there is a lot of interest in pension plans.
Yeah.
And again, like whether it is life insurance or whether it is pension, it is to a large extent social security, which in developed economies which can afford is taken as a government responsibility. I think definitely we can do something better in terms of some tax incentives. In fact, not anything new, but just maybe going back to what was there earlier up to the year 2004. And there are certain things which have not really added to the government revenue, but have become a huge irritant when we discuss proposals with our customers. Especially like, let's say, TDS on maturity, TDS on pensions, NRI, there is almost a 33% TDS on pensions, which doesn't go down well with any NRI, so a lot of that money has stopped coming in. And of course, incentives for people who are in this business, like an agent earns 15,000 rupees, he gets into the tax issue. There is a TDS with him. I think definitely increasing limits for TDS for agents, and then removing TDS on maturity claims, on this issue of short-term policies. There were a lot of people, especially the millions today, are not willing to get into long-term contracts.
The
And
millennials,
the
to
products,
blame for pretty much everything.
No, they are not to blame. Basic thing is that today, the way the people, the employment cycle is becoming very different today.
Yes, yes, absolutely.
So, if you were working in a government job for 20 years, there was no problem. Where every 2 years you are changing a job. You can't possibly think of an investment for a period of 20 years. So if I want to buy a 5-year policy, the regulations just don't allow that kind of a thing.
Absolutely.
The minimum which has now been allowed is 7 years. So these certain more things, if they are facilitated, like I was saying earlier, if we generate 100 billion extra premium, it will have a spiraling effect in the entire economy and contribute $500 billion in 1 year.
Fabulous.
Today, there's not the issue of achieving a $5 trillion mark. That is going to happen in 5 years willy-nilly. The issue is, like China, can we grow from 3 trillion to 5 trillion in 2.5 years? And there, I think, insurance, and especially life insurance, can play a huge part.
Fabulous. I'm going to thank you on that note, and here's to unshackling the potential that this sector holds. Thank you so much for joining us today. Thank you.
Thank you so much for those insights, and let's hope that the insurance space continues to deliver superior returns.
On that note, we're going to take a very short break for lunch at this point, but make sure that you come back for some very interesting and insightful sessions in the afternoon. We're going to meet again at 2:50. Whatever. Huh? Come, we're chilling there.
Ladies and gentlemen, may we request you to please step out and do enjoy lunch. May I request you to please vacate the room since we have to do a couple of technical checks to ensure that the remaining day at India Economic Conclave is as entertaining and informative as the first half was. Thank you.